Okay, we're at episode 18 now. So we've done 18 days already. It's gonna be fun. I'm just gonna add in the poll. Last night's poll was pretty cool. Let me just go ahead and put in the question. Putting in some of those polls. How's everyone been doing? What's happening? It's been a fun Monday, right? Good for the stock market though. A lot of stocks went and hit 52-week highs. So and that is one good thing. Just trying to put in the poll so we get that rolling. Let me see if I can put in 2 more options this time. Let's see. Let's go. Let's see what's happening. There you go. You should be able to see the poll as well. It should come in any moment now. Yeah, there you go. All right. Great. So it's been a fun day. I'll give it that much. Markets were pretty choppy from time to time. They went up, they went down, they went here, there, everywhere. Then they came back to where they were. Few things that I liked seeing was the AI stocks, right? They've been doing pretty well. So that's one thing. Anyways, we're just going to wait and for people to join in. Let's see what's currently going on. Just going to wait and for people. It's also going. Okay, cool. So we got this done. Let's go in there. Just few of these housekeeping stuff that I'm just finishing before we start the show. Episode 18. This is episode 18. We do this pretty much on every weekday, 7:30, right? 7:30 p.m. Eastern. Go over the market, see what's happening. Make sure to subscribe and hit the poll. I want to see what the results for the poll are. So we're aiming to get to 100 subs now, maybe this week. So go ahead, get that done. Anyways, drop into the comments, say hi, so I know who you guys are. I can say hi as well. That'll be fun. But yeah, some crazy shit going on today, man. It was like pretty messed up. Few things that happened. When it comes to the stock market, everything was pretty chill. We had it was a good day. Nasdaq up about 0.6%, so things look good. Most of the stocks, Netflix, Spotify, all of these stocks, pretty well. I mean, doing fabulously well. There's no reason to worry about any of these companies, right? A lot of people are still bearish, and that's kind of stupid, but fair enough. You need some of those in order to make money. Because at the end of the day, we're here to make money, right? I mean, in all seriousness, that's the plan, is to make some money, right? So go ahead, introduce yourself, just come into chat. Chicken tikka masala. You know what, bro? I've not been able to find that here. I actually want it, but I've not been able to find it. It's some of the most best shit on planet Earth, but I just can't find it. Southeast Asia has some horrible food, man. Like non-local food, I mean, to say to that extent, right? But nice to see you, Organ. 07. Is that a 0? Yeah, that's a 07. Yeah, nice to see you, man. How's it going? How was your weekend? Mine was pretty good. Thanks for asking. Just playing around, man. But nice to see you in. So let's see what the hell happened, right? From what I remember, Nvidia was up a bit, so that was good. Good to see. It was up about 1%, 1.67%. So that looks pretty cool. Dude, now that you say chicken tikka masala, I feel like having it. I just can't find it here. You know, the last time I had Indian food here, it was like so bad. I had to puke. So I've stopped trying to see if I can get good stuff there, but be that as it may. Anyways, go ahead, just say hi, guys. What all is happening? We'll start pretty soon. I'm just trying to get a few things in to see what's happening. Why is FIS down 2% in post market? What the hell happened? Anyways, let's see. Yeah, so the breadth was not that great. I mean, it was okay. It wasn't like something you can write home about on how well they did, but it's okay. As in, I don't see anything being too risk off at this moment. Some of these stocks, right? I mean, the high beta ones like Affirm, Lemonade, all of these seem to be like just flying, like just going for it. So I don't know how that works, but I'm not sure that any of these are even doing pretty okay, right? The Nasdaq did had a good day. It closed at day's high. Now remember, usually when you see stocks and companies close at day's high, that's usually a very good sign. So you saw it open, you saw it make a small time low and then head back up, go and close near all-time highs. So that's actually pretty bullish, because when you see that, those kind of movements, you're going to see stocks go way higher. I think if we head up another percent and a half, we're going to start getting into closer to all-time high territory. So that's that as of now, man. I mean, it's just pretty fascinating to see all of the news that's currently happening, everything that's going on, and markets are still like, okay, cool. You can put your tariffs, you can put all of that. We're still heading higher. So that's all in all, that's a good sentiment to have for the market, because if you do actually head towards all-time highs and higher from there, you're going to start seeing a lot more of these high beta stocks, maybe even double, maybe even go up 50%, 60%. It's not unfathomable to see that happen, right? Keep in mind, you did see the Nasdaq go down more than 25%, literally 2 months back, right? The top tick to bottom tick was about 26.71% on the Nasdaq, and you have seen a large recovery back. The recovery only makes sense if you're able to break to all-time highs. If you start staying within this range and not breaking into all-time highs, that is a sense of concern. I mean, that's something to just know about, because you don't want to get overly bullish on every green day that you see, thinking this is going to be a secular bull market. In my opinion, this is the way I trade and the way I make money and the way my money is positioned is 7,000 on the S&P 500 should be coming pretty soon. By pretty soon, for me, being a year and a half. All right, it's not something that should currently worry anybody. I have a feeling we will be breaking into intermediate highs, which is at least 6,000 on the S&P 500, possibly this week itself. It's looking interesting at the moment. I am seeing moves that are happening in particular stocks. One thing I'll basically let you guys know on, it's not a secret, but you should look at these things in a particular way, because what happens is when stocks come out with earnings and they start heading higher post earnings, right? They've beaten, raised, all of that. All of the analysts, they've kept all of the analysts happy on Wall Street. So prices have gone crazy higher, and that's currently been happening. Do they see follow through, right? In a bear market or in corrections that head lower, right? You are going to start seeing stocks that break these new highs, go up way higher, start coming back to their pre-earnings levels. When you start seeing stocks go back to their previous highs, that's actually a very big bullish sign for the market in general. I don't mean just for the particular stock. I mean for the market in general. When a stock breaks, let's say when a stock breaks out on earnings and then continues up there or stays up there, like usually you see some of these stocks, right? 20% up, 15% up. Are they holding those levels or are they coming back lower? If they're holding those levels and not coming back lower and then heading higher as well, that's a sign of more fresh money entering these stocks. Traders are not going to be able to move stocks 15, 20% in a monthly basis. These guys are in and out quickly, right? So that is something to look out for. And I've been seeing that happen this earnings season because to some extent, also keep in mind, a lot of the analysts as well as investors were very worried about what the earnings would look like. And the earnings was, to a large extent, a big surprise because many people stayed out of it, but then it eventually kept getting better and better and better. And everybody's still waiting for that horrible earnings report or that horrible inflation data. None of that's been happening yet, right? And I'm not sure if it's going to happen as well. So that's just something you should look at because that's the way to analyze how markets in general are. How big is the risk on sentiment? How lower is the risk of sentiment at this moment? Let me just get over it. Henry says, Old Tech is nice to see you, Henry. Thanks for tuning in. Old Tech is dead, drop IBM, HP, etc. Dude, I honestly don't even think anybody uses that anymore. Like, I would be surprised if I see an HP laptop somewhere. Like, I would just be like, I would just go up to that person and be like, why are you doing this? Like, why? Why are you putting yourself through this? So those stocks are like done and over with, man. I mean, it's done. Like, I mean, there's no point in going on that bandwagon trying to figure out why is it going to be better and worse. IBM to some extent might still survive because they have a lot of B2B and all of those other tech systems that they have. But I'm not sure about HP, man, in all seriousness. Yeah, Diksha, nice to see you again, bro. I'm guessing you mean PED as pent up demand. But if that's the case, you're right, absolutely. I do believe that. It's just so much money on the sidelines, right? And the faster you head up, the more amount you're basically looking at trying to see how much higher do we go. So let me just run through that again for everyone that's not got that figured out. When a stock breaks out and heads into new highs or starts heading higher, you see a stock go up 15%, 20%. In raring bull markets and secular bull markets, which I believe we are in, and every day it proves me the same, you don't see that stock start coming back to its pre-earnings level or lower. The day the earnings come out, that pretty much maintains an intermediate low. Now, you could have exogenous factors like tariffs and something else that come in that can make the stock go back lower, but it'll come back to where it broke out from. It does not go lower than that. And when that happens, that's something to keep in mind because then you're going to start seeing prices go way higher and continue on that journey because a lot of people are still waiting for that pullback. And that pullback might happen, but that pullback will happen so much later. Like you'll see a $50 stock go to 75. 75, you'll believe that, okay, I'm going to wait for it to come to 65. It's not going to see 65. It's going to go to 90. And then at 90, most people would come in and buy. And then what's going to happen is that then that's when you'll start seeing it coming towards the 80, 85s. And then you're going to be shit scared saying, oh, did I get it wrong? Now it might go back to 70. So the way I look at bull markets to a large extent is I try figuring out and seeing whether we have a move that is currently happening on a stock. Like I'll give you an example. Look at something like Broadcom, right? I don't own it, but I watch it because it's like the picks and shovels business of the AI trade. You saw it drop all the way from 250, come down all the way to 140, right? And in the same 2 months, 140 is back to 250, right? So all said and done, that is pretty interesting to see when you see these things happen. So some of these stocks need to start breaking into all-time highs. Once some of these stocks, which are these bellwethers, right? You look at Broadcom, maybe even Nvidia does it, right? My belief is Nvidia in the next 2 weeks could be hitting a 1.5 handle. Maybe, I don't know. No, I'm not putting money on it, but that's my bet. If I see that happen, you're going to start seeing a lot of these stocks start heading towards their all-time highs as well. Stocks heading to all-time highs will eventually move with the index also heading to all-time highs. I remember still last week when we were talking about things, it did look like the market was heading to new highs. It was going to happen. Friday was a bit of a dampener, but then eventually it does play out. I mean, we're not trading anyways on a day-to-day basis. But from what I can see, especially today as well, it does look like a pretty good move that's been happening. Now, let me get over this. Hey, Kevin, nice to see you, man. 7:30 show, let's go. Yeah, episode 18, bro. I think we're about a few subscribers short. So, everyone, go ahead and subscribe. Go ahead and introduce yourselves. Say hi to everybody. We're building some form of a, for lack of a better word, cult, but that sounds right. I'm excited to keep doing this on 7:30 every day. So, it's fun. Dikshant says post earnings drift. Yeah, that's true. And that drift has been holding on, right? I mean, you guys can name maybe like 3 or 4 stocks also. These drifts don't seem to be heading lower at all. They're just pretty much heading higher and higher. Right. Kevin says he's happy with today's movement. Yeah, I think a lot of people are going to be happy with today's movement. That's true. I would surely be a lot happy seeing today's movement. Where's Jason? I think Jason's going to tune in a few minutes, man. I'm guessing he's coming into. He's going to start saying hi, and then I'm going to say hi to him as well. And yeah, so these few things that happened. High beta took off today. It was a good day in high beta. Some of those stocks that I did see were doing pretty well. What's up? What's up? Matthew's in the house as well. How's it going, Matthew? How's it been? Long time. I did do a Saturday, Sunday live just because I had nothing else to do and I was anyways working. So I said, let me just come and let me see what's happening. I was actually expecting some of that tariff news to play out, but none of that nonsense happened. So I was like, fair enough. Anyways, be that as it may. So one of the things that I was actually thinking about last evening was and you guys should let me know what y'all think about this, but a lot of people got this oil trade wrong. And if you think about it, OPEC has increased its production, right? So these oil producing countries came together and said, oh, we're going to increase the production. And that's going to cause prices to absolutely go lower, right? But you had this Russia-Ukraine thing that happened under whatever airfield that it happened in, and planes blew up and all of that. And you started seeing oil go up about 5%. Now, I am always bullish, very rarely bearish. I am at times skeptical, and maybe today was a day for me to be skeptical, which was against the crowd's beliefs. The only reason I was skeptical is I always get skeptical when I see gold go higher, oil go higher, equity markets go higher, and bond yields go higher, right? And anyone that comes and tells me that's risk on sentiment and everyone's buying everything, that is bullshit. You know when that happens? This happen at bottom lows, right? Then I do understand that. But otherwise, it's pretty unlikely for me to believe that you're seeing some form of a secular move is pretty much skeptical for something when you see all of the asset classes do well. Mind you, crypto was the only one that didn't do well yesterday and even today, right? You've seen it for Saturday, Sunday, Monday not doing well. Again, it's had a move all the way to 112,000 and then back. But let's be honest, guys. When you see gold, bond yields, equity markets, oil, all of them head up, that's something to keep in mind, right? Because you don't usually see those things happen at the same time. If for this week we start seeing that happen, there could be a lot of positioning that these big fund managers are currently doing because of the speed with which we went up. But you saw an almost, from what I remember seeing last, gold was up about 2% yesterday and closed at day's high. NASDAQ closed at day's high, gold closed at day's high. I mean, guys, don't tell me that people are getting risk on onto equity markets and buying gold at the same time, right? So it is either of the two things. One, someone is hedging massively in order for an impending, exceedingly big rally in the equity market or a crash. Or two, a lot of fresh money is coming back into the system, which was just like, okay, now I missed it and now I need to just be back. So build my portfolio accordingly. And this is not some 100, 200K, 500K, or like $1 million portfolio, or even a $100 billion portfolio, right? It would probably be way more. So just keep that in mind. You don't see 2% days on gold, 5% days on oil, and a green day on equity markets as well. Few things let me run by what's up with the chat, right? Matthew, don't worry so much, man. I don't understand a single thing you say. It's all cool. It's all cool, bro. Don't worry about the oil, man. We're all good here. Right? Kevin says, yeah, it's the voice of money, my friend. That's true, man. That is absolutely true, right? Okay, great. So let's get done with that. And the other thing that I was looking at was, so I actually do want to see, if I want this rally to continue, I do want to see crypto coming back. I have zero dollars invested in crypto, and I couldn't give a rat's ass if it goes down to zero or to 200K. I only care about it as the perspective of what is the move going to look like for risk on sentiment, right? Are people moving into cryptocurrencies? Are people moving into equity markets more and more? That makes me believe that high beta as well as equity markets can head higher and higher. It's a way of trying to analyze where you are currently in the stock market and where you can be 6 months from now. I am very close to pulling my trigger on a few positions that I want to. I'm still waiting to see what happens in the next few weeks or maybe next few days. You know, I just want to see that there is some light at the end of the tunnel. Keep in mind, everyone's now currently saying tariff noise is tariff noise and all of that. It is noise till the time it doesn't become a larger story, right? What I read about yesterday was India and the US have some issues on their trade policy. I know Japan and US have some issues on their foreign exchange policy. China and US have their own issues any which ways. And China, what might just be, this is contrary to popular belief. According to me, China would be the easiest trade deal for it to happen. It just requires two people to get on a phone call and be like, get this done. That's it, right? The only reason it takes longer than usual is because China looks forward to seeing how the world is reacting to Trump's tariffs, and then they decide what is to be done. They couldn't give a rat's ass as to whether they're tariffed 125% or 35%. They're interested in simply forming that big union saying that they are the world's most powerful currency. They want to build the next currency for the world. They want the yuan or the renminbi to become the next currency. None of that shit's happening any which ways. I mean, nothing against the Chinese or all of that. They make great food. But let me be honest here, none of us, right, are going to enter or shift all our dollar investments or our own currency investments to the yuan and renminbi. That shit's not happening, right? So towards the tariff noise, if we don't start getting deals in the next few weeks, that's going to be an issue. Trust me, that's going to be an issue. And the reason I say that is because you're going to see that against a higher oil price and a higher gold price, which is what I'm coming back to, right? Which is why I said you need to put these 2-3 things together. Will businesses do well over the long period of time? Great. Yeah, all of that's cool, right? When none of us here are betting on the fact that the American exceptionalism is dead. What we're betting on is, can these guys make sure that that American exceptionalism stays within itself and does not just bust itself up because a few people here and there had an ego problem to not sign deals together. Just keep that in mind. Right, let me just get over what Kevin's saying. Kevin's like, I have around 5% of my investments in crypto. I just need a piece just in case it continues this pace. Yeah, 5% is cool, bro. That's like, that makes sense actually, because it could be worth about 15 to 20 for you if prices keep going substantially higher, right? And I'll tell you one thing. My bet is that if equity markets do head towards 2027, 2026 levels of 6,500, 7,000, 7,500 on the S&P 500, my bet is you will start seeing crypto being way higher than where it is right now. Now, I'm not sure about the Solanas, XRPs, and Ethereums of the world. I just know Bitcoin in that essence. I do understand a lot of the other smaller ones as well, but I would rather bet on Bitcoin being there than all the other guys, right? Let me just go over and see what the hell is happening with the votes. What are we at? We're at 8 votes, I know, but who's winning? What's happening? Is patience winning, or what the fuck is happening? Come on. How do I even see this? Yeah, there you go. Okay, yeah, patience and discipline. So we got a lot of long-term guys here, man. That's pretty cool. It's good fun. Anyways, so That's what's been happening when it comes to gold and oil, and that is something to keep in mind because everybody's not talking about this. I don't know anybody talking about this at the moment, where I do believe people have turned bullish because they've started seeing their portfolios going up. But I also do believe that people are not keeping in cognizance the fact that gold is heading higher, oil is heading higher, equity markets are heading higher, and bond yields are heading higher, right? These things don't work in tandem. But if it's happening, you should look out for these. These are telltale signs of what could either be an impending massive multi-year rally in the equity markets, or we could be topping out for a very long period of time, right? Can I tell you what is happening? No, I don't know. And I'll be the first to admit that no one goddamn knows, right? We will know in hindsight. What you do is position yourself in a way where you don't get bitten by such a large amount that you don't know what's going on. So let's go over a few things. Let's see. Okay, so crypto's been picking up from the lows. It was at about 103. So Kevin, you should be happy as well about that. That's a good thing. What are we seeing? What else is currently going on? Right. Another investment that I was actually thinking of was Apple. I don't think the tariff nonsense is going to cause too much of an issue to it. I think Trump and Tim Cook are going to work something out. So Apple's on my radar. I haven't yet bought it. It's still on my radar. I'm still looking at seeing what exactly happens with it. It's nothing too fascinating. But what is stopping me from, one of my friends was asking me this, right? You're bullish right now. What is stopping you from buying more equities or like levering up and trading a bit more? The only thing that currently stops me from going levered up and making some trades and making some investments that are substantial at this moment is the fact that, one, people are turning more bullish than normal and very quickly. Two, I'm not yet sure that they're going to be able to take care of the bond yield issue. While at the same time, let me just give you an update. The Treasury Secretary, Scott Bessent, is currently thinking of increasing the capital requirements that a bank must supposedly have in order for their treasuries, and that could drop the 10-year treasury yield by about 50 to 60 basis points. So I do believe that can be something that can happen. It can happen over time. It's not necessary for it to happen in a single day, right? Let me just get over that. Kevin says, I have BTC, a good chunk of XRP, because I believe their use case and believe their CEO, Brad. Yeah, Brad Garlinghouse is a pretty cool CEO. I'll give you that much, right? And the guys who have been creating XRP are pretty decent. So we got, I'll tell you one of these stories, right? I mean, I remember putting in maybe just $1,000 at about 3 cents in XRP. And I sold it at a, whatever, I think at $1 or something. So it was 3 cents to $1 and we made some money, and that's about, but this is back in 2017 or something like that. But other than that, I've just been away from it. I just can't understand it to that much of an extent. And I like playing within the circle of equities, but I get it. When you're just 5% of investments in crypto, it actually makes sense, right? Anik says, hi, how's it going, brother? Let me get over to the last part of Kevin's question. Plus MicroStrategy for the incredible growth, even though I know it's risky. I don't think it's risky, bro. In all honesty, I don't think MicroStrategy is risky. MicroStrategy only gets risky if crypto is down 40%, right? Otherwise, you got pretty much a levered trade going on MicroStrategy versus Bitcoin. Because if Bitcoin's able to go up 50%, MicroStrategy is going to be up about 2.5, 3 times or more, maybe, right? So that's that. Hood, another good day. Yeah, I saw that. It's almost at 67, right? It's going to go hit 69 pretty soon. But it's looking, another stock, right? You look at Hood and you look at Broadcom, they're pretty similar. They're both heading to, they're already at all-time highs, but they're both coming back from their lows all the way back up. So that is something that I've been looking at as well. A lot of these high beta stocks have been doing pretty well, right? That's something. And I says, so what's going on? At the moment, nothing, bro. What's up with you? How's it going with you? Yeah, so let's go back. Let's see what else is currently going on. So Meta had a good day. 671 on Meta, up about 3.5%. I think so too, man. I actually do believe that Robinhood would join the S&P 500 pretty soon. I think Robinhood would join the S&P 500, I think in a few years or months or quarters, I don't know when. Reddit might be another one that will join the S&P 500. They've just joined the Russell 3000. So if you join the Russell 3000, you anyways join the Russell 2000, 1000 also. I think Reddit's another one that over the few years can be a part of the S&P 500. So this is something that I do as well. I try looking for companies that are currently in the Russell 2000, 3000, or maybe not even there. And do they have the potential to get into the S&P 500? What do you need to join the S&P 500? Not from a market cap perspective. You need a total addressable market for your business to be exceedingly large, which means you need to be able to make money on a large scale basis. One. Two, you need to have profitability to a decent extent, right? Or at least the process of getting till there. Three, you need great management, because the only way to get the second and the first one done is to get great management to run that company. And four, you need to be able to meet those market cap requirements of 18 to 20 billion, right? So you find a $4-5 billion company that can now go up maybe 3 or 4 times in the next 2, 3 years, 4 years, and you see that it has a potential to go up a lot more because its addressable market is so large, right? Look at Robinhood, right? They just completed the acquisition of Bitstamp yesterday. They pretty much have anybody. I would be surprised to know if anybody who is below the age of 35 currently is not a subscriber to Robinhood in terms of buying equity or buying shares or trading, right? It is just so simple compared to like all the Charles Schwab and all of that. And I personally use Interactive Brokers because I've just been using them since donkey's years, so it makes my life simpler for me. But otherwise, Robinhood is just, I would say they're the Tesla in trading, right? Because they've just revolutionized it to such an extent that you just have so much of first mover advantage that it's just going to keep going in and keep heading higher. Anyway, so I'm going to get back to this. Make sure all of you guys go ahead and vote. We got about 9 votes already. Go ahead and subscribe and put in your comments about any stocks that you like or that you're looking at. You know what was fascinating was a lot of people don't know this, and a lot of people were surprised that yesterday we had, or pretty much this afternoon, we had Federal Reserve Chairman, right, Powell coming in and talking, and he didn't say a word about the economy. He didn't say a word about the markets. And I was just like, nothing about inflation, nothing about any of this. I was like, dude, that's fascinating for me when I see that happen, because I would have expected him to say something to at least let us know what's going to happen in June. But I guess I know he's not going to cut in June. I mean, who doesn't know that, right? But how do you not have any form of anything that comes out? But again, yeah, I mean, he is who he is, right? So he can do what he wants. Let me get that they want 24/7 trading and they want to tokenize everything. Yeah, that's kind of true. I do believe at some stage we will get to 24/7 trading. I'm just not sure if we're all going to be able to keep up with 24/7 trading. It's just going to we would lose the fun of an open and a close. Let me put it that way, right? What I believe is that if you start having 24/7 trading, there's a lot of excitement as well as interest that people have when they know that they're waiting for Monday market open and Friday market close. When you start getting 24/7 trading, you'll just become like zombies trading crypto, right? That's something that will just keep happening. A lot more people will get burnt out, pretty much bankrupt, because it's just going to, remember, right? I mean, equity markets are so powerful that a lot of people think crypto is volatile. I'm like, dude, if you're going to look at out of a 90-day period, if you're going to look for the fact as to what moves more, yes, crypto moves more. I'll give it that much. But you can have a stock move more than 10, 15% in that one quarter at least twice. So once on earnings and once on some crazy thing that happens in this world. Now, what are you going to do on that earnings day? Because it can literally swivel so much that you start having it on 24/7 trading with leverage. A lot of people are going to get killed in that firm. right? It's not something that's going to be sustainable for a long period of time, but it will make a lot more people, it'll make a lot more investors traders, and that's the problem that I have, right? But who's listening? So doesn't really matter in the grand scheme of things, right? Let's go over and see what else is happening, because I actually wanted to, I was planning on talking about maybe if something, there is something that Powell says in his speech that makes it seem like, okay, we're pivoting to some form of a rate cutting cycle or a hold cycle for a very long period of time. And he just like came and said some, like absolutely nothing. Like I can't even decipher anything that happened in that speech. It was just so dead, right? The same old thing came all over again. But yeah, let me just see what else is happening. Somebody was asking me yesterday about what is my year-end view on the S&P 500 and my next year and a 2-year out view. Let me put it out there. I still expect a 7 to 10% move from here for the S&P 500 till year end, which means we would be somewhere around a 63 to 6500 on the S&P 500. And by 2026 end, I think, so my bet is not towards like a year end, let's say somewhere around, so November we have the midterm elections, and then we're looking at 2 quarters after that. So let me say June 2027. 7,000 to 7,500, and more likely 7,500 on the S&P 500. I actually do think we could even be at 8,000 on the S&P 500. Not this year, exactly 2 years from now. It's not too much to ask for. Usually the third year of a bull market is very, I wouldn't say choppy, but volatile. You go up like 5-7%, you come down 5-7%. You close somewhere around in the single digit numbers. The fourth and the fifth year usually are good years again. The first and the second being 23-22% that we already had. The next year being about a 4-5% gain or a 2% gain. It's somewhere around there. So I'm not expecting too much. We could see 6,200. Even if we see 62, 6,300 on the S&P, we're good. What I want to see this year is new highs. If we don't see a new high, then that's going to start worrying me. And I want to see it pretty soon. Like, I don't care if we hit a new high and then come down 4%. It's okay. It's absolutely fine. But that is something that I'm still looking at. I want that to happen. Without that happening, remember, complacency will get into the market because everyone will start expecting the new high to come in, and you will get a larger pullback than normal. 2026, 2027 should be again very bullish years. Markets should do pretty well. Remember, there's only so much that Washington can control when it comes to the stock market in a longer time frame. In shorter time frames, yes, I understand there can be a lot of noise and stock markets can go up and down, but not in longer time frames, right? It's the major thing that affects equity prices is bond yields. What interest rate are we discounting next year's earnings and the few years after that, the earnings that come out? So if the bond yields are over 5%, 5.5%, that is something to start thinking that, okay, things can get worse than where they are currently. So, and that's pretty much what I'm currently looking for. Let me get Kevin's question here. Do you have a show that gets to know you and how you got started in this? I don't have a show, bro, yet about that, but that's a good idea though. We can actually do that. That makes sense. In all essence, it wouldn't take me more than 5 minutes to explain that. So we started with about $150, eventually just doing leverage trading, made some over period. This is about 16 years back, right? So it's 15, 16 years back. So it's been a while. Eventually made money, kept going on that same bandwagon of trying to make some more money, few $100s, that became a few $1,000s. We had some big wins. We had some investments that we made even within crypto long back. Those did okay, not too great. And then we went into a few more of positional trading that happens, right? So we used to be I would say we were maybe 20% of our book was investments and 80% of our book was trading. So we had some stocks that we owned all the way down to like maybe $20 that went to about 500 in a few years. So that made us money. Eventually, we started realizing that finding better companies and investments. So when we were about 17, 18, there's a few friends of mine that together we were doing this together. 70, we still work together. So it's been about 15, 16 years that we're all still working together. So you see them on the other videos, the longer form videos, right? 15, sorry, not 15. So we did that all the way. We kept trying to go ahead, keep doing the same thing again and again, invest in companies that make sense. We don't trade with too much now. We used to trade like, let's flip it, right? The 80-20 is now flipped. We used to have a 20% investment and an 80% trading book long back. Now we have an 80% investment and maybe a 10 or 15, 20% book when it comes to trading. Again, our trading is not conventional trading, right, Kevin? It's the only thing I trade is longer term leaps. So something like a 2 year, a year and a half out leap. I don't trade a 3-month position at all. It's just I'm horrible at it, so I'm the first to admit that I'm shitty at short term trading. So I don't want to do that. And it's unnecessary to do it at a larger quantum of money. It's just stupid. It's not required, right? So that is how it is. I mean, now that you say it, right? Do we have a show that gets to know us? Maybe we should make one. Maybe we'll do it this week or the week after, right? That's a good idea, though. What is it? Okay, let me give you a sneak peek into one of the things that I'm looking at. I'm actually thinking of buying some Nike now. Not the stock, the shoes. Yeah, fair enough. But the stock. It's at 61, 60, 61. I have a feeling, yes, maybe, triple digits can come in the next year, year and a half. Possibly. So I might buy some leaps on it. I think the Vietnam trade deal will take place. I think the Chinese deal will take place. I don't think the EU deal will happen as soon as people believe it will. But possibly, especially a few things, right? 3 things because of which I'm bullish on Nike. One is they're increasing their prices. So it's always a good sign when a company increases prices, right? Yeah, okay, maybe there are tariffs and all of that, and that's why they're increasing it. That's cool. That's water under the bridge. Second, Elliot Hill, the guy that was the intern that has now basically built the Jordan brands and a lot of the brands along with John Donahoe. He left in 2020 and then now is back in 2024. And now in 2025, he's making a few changes. And they've just kitchen sinked their quarters, right? They just came out and said, listen, we just got too much issues on our hand. We just got to clear all the inventory and then go ahead. The larger reason why I'm entering is because they've started pivoting their mindset on Nike's management to looking forward to selling at more places. They were only come to Nike.com and buy, right? And now they've shifted to let's sell it on Amazon, let's sell it everywhere else. Let's also do this. That's how you get your sales. That's how you get your brand to be seen everywhere. The reason why Nike's stock price is so much lower is because On and Hoka were able to take over those retail shelf spaces that Nike said, I don't want to put it out in Foot Locker. I want it only on my website. And that is changing. And people might say that yes, On and Hoka are going to take over all of Nike's marketing. I'm not sure if that can happen as soon as people think it will. But what I'm looking at more as a trade, Nike, not as an investment for like 5 years, but as a trade where I'm looking at Nike to move back to its 100, 120 levels. So I might buy leaps a year and a half, 2 years out and see what happens with it, because I actually do believe that there's a lot of bad news already priced into Nike. I mean, how bad can it be, right? You come out and say that, okay, my sales are going to be 10% lower, my margins are going to be 10% lower, my inventory is going to basically suck because I don't know what's going on with my inventory and I need to sell whatever I can at cheaper prices. And they've done and over with that, right? All those discounts and everything's over. They stopped giving so much discounts. They've stopped all of that. So there could be a lot more additionally that is not priced in a bullish way into the stock. So give me your views on Nike. I would like to know that before I go in and think about it. I want to see both sides of the story, right? Okay, for all of you that are new here, go ahead and subscribe and comment on the stocks that you like and you're looking at this week. One of the stocks that I'm looking at for this week is going to be, what happened to Palantir? 132, man. Palantir just doesn't stop, all said and done, right? Just all said and done. One of the stocks that I'm looking at for this week is a stock called Lemonade, right? So that's that. Let me get who's. Hi Naveen, how's it going? Nice to see you. Where are you based right now? I'm in Southeast Asia, bro. At this moment, in July, I will be in Singapore, and towards the end of July, I'll be in the Middle East. Do I live in the States? No, buddy. Those tax levels are too much for me at the moment. But yeah, I don't. I'm based out of the Middle East in the UAE, and then I keep traveling around the world. So that's that. Okay, let me try seeing what else is happening. Right. Nice to see you joining in, Naveen. Let me know if you have any questions. Go ahead and subscribe and vote, man. You guys have to vote. Are we at 10 votes already or no? Or we're at 9 votes. Naveen, we need your vote. Go ahead and vote. Be nice. Yeah, patience and discipline is still winning. So that's that. Okay, so I did see the Chinese stocks yesterday go down pretty bad. They were actually pretty much lower than before, and that was 2.5% on the Hang Seng Tech Index, and I was like, whoa, that's big. But again, it's up 40% year to date, so it's not too much to fall down 2.5-3%. But then, anyways, it recovered all of it and came back. So it's just part of life. I was trying to figure out if there was anything here. Is my chat delayed? I don't really think so. I think as soon as you type, I can see it. I'm not sure. I might reply to you like a few seconds late if I'm doing something here. So that's just that. So yeah, that's few things that I was looking at. Fed chair, nothing great happened. Equity markets going up, great, but when I see gold, bond yields and everything go up a lot more, I get a bit circumspect about what else can happen and can't happen. I start holding back on a bit of risk. What I'm planning to do, and I might do, is reduce some of my investment book, keep some cash, and put some of that additional cash into leaps. So longer term options, and see how that plays out. So at the moment, this is currently what I'm looking at. We haven't seen anything incredible, you know. So look at something when you want to figure out and see if the market is going to head on a risk of sentiment. Always look at what the Japanese yen is doing as well, right? The US dollar to Japanese yen. Every time you start seeing the yen go higher, which is the dollar head lower, you're seeing more safe haven status, right? So I'll give you an example. You're looking at, since the start of the year, we were at 160 on the USD JPY, and today we're at about 141. So what you're seeing is that people rushing to safe havens like the yen and selling off dollars, selling off equities. And that's currently been happening. What you have seen very differently is equity markets going back closer to their all-time highs, while the USD JPY has stayed at its lower areas. So around the 140, 142 level. So currencies, pretty much the dollar has not done very well when it comes against most currencies. So the euro was pretty much at parity somewhere around the start of January, and now we're seeing it at 1.14. So 14 to 15% improvement in the euro compared to the dollar. Most currencies, other than I think emerging market currencies, most major developed currencies have beaten the dollar pretty well this year. So I look at a lot of these things just to put things in perspective, like put two and two together and see if shit's hit the fan in this world yet or no. Because when that happens, I want to buy. But I just try looking at this from a perspective of trying to see what we can talk about when it comes to not getting overly bullish when everyone is bullish and not getting exceedingly bearish when everyone's bearish. You should have some form of caution, but not just caution. All right. So look at it from that perspective, because it's not the be all end all of investing. And one of the things that I was actually looking at was largely the 10-year bond yield. If Scott Bessent and what he's saying about the 10-year bond yield, he's able to pull it off with the capital requirements. If you start seeing a 10-15 basis point reduction in the 10-year bond yield, you would start seeing equity prices go a lot higher. You will start seeing PE ratios of stocks as well as the market in general, which is currently at 23, go a lot higher as well. So mortgage refinancing that we spoke about, pending home sales, construction spending, jobs improving, you could have a lot of this stuff that keeps going on and on. It's not going to stop as easily as people think it will. So that could actually be a huge bellwether for what exactly is currently going to be happening with the 10-year bond yield indirectly to the equity markets, right? That should also take the gold prices lower, but not seeing that happen at this moment. So that is something again that I would look forward to and see when is that going to happen, right? So we should also be seeing, from what I know, the White House came out and said that you should see a President Trump and party chair Xi beginning to speak maybe this week, have a call. My bet is it's going to be a call. They're going to sort their stuff out and be like, okay, great, let's do it, right? They have a great understanding is what has been told. Now he needs to stick to that great understanding that they have. He cannot be like, okay, I had a horrible call and then we're back off to all tariffs. Now, if that happens, which I don't believe it's going to happen, but this is what I keep saying, right? China and the US would be the easiest trade deal for it to happen. It is just that they have egos to solve. Otherwise, it's the easiest trade deal. What America wants, China can give, and what China wants, America can also agree to. All it requires is the Chinese to make their people believe that they won some argument, and the Americans to make their people believe that their side of the battle has been won. Right? And it is going to happen. It is far too unlikely for two of these sized countries to go ahead with the rates that they were at or their rates that would increase. Not going to happen in this scenario. And let me be honest, if in August, once these trade tariffs that are put on China and on each other back again, on America as well as on China, if they're not sorted out, none of these 7,000 numbers that I'm giving you as well as everybody else thinks is going to be bullish and all that, it's all out of the window, right? It's done. The recession would be worse than 2008. And you don't need that recession to take 6 months to hit. It will happen in less than 6 weeks. Do I believe that's going to happen? No. Why do I believe it's not going to happen? Because President Trump still needs his bills to get passed, his deregulation to go through. He needs the House support, he needs the Senate support for his bills to get cleared. All of that needs to happen. In order for a lot of that to happen, and for him to continue on his policies that he wants in the future, because he needs his legacy to get created, right? He wants the Trump legacy at the White House to get created. So think of it that way. In order for that to happen, he needs to continue to win the midterm elections in next November. How's he going to win it if we have a recession? How's he going to win it if stock markets are lower? How is he going to win it if we have trade wars still going on in next November? It's a long time away, right? Next November. But these guys need to plan in advance, because the election is in next November, the midterm elections. And the most bullish 3 quarters in history of equity markets has been the quarter of midterm elections and the 2 quarters after that. So you're looking at somewhere around October, November, December of next year, and January to April of 2027. So those are the most bullish quarters that you can find in equity markets. And why is that? Is because these guys start pivoting to a more business friendly, more economic friendly, better tax regimen. So in those kind of scenarios, at least they talk about it. I'm not sure if it's going to happen or no. Who knows, right? They'll sell us a lot of this snake oil stuff that we don't really know whether it'll happen or not. But even if the thought of it is there, the markets will have certainty. The markets will have something to look forward to, and that's how you might see 7,500, 8,000 on the S&P 500. So I am certainly exceedingly bullish, but I keep my head on my shoulders when I start seeing things like today happen. If I start seeing this trend happen for a bit too longer, it is something I will genuinely worry about in the short term, not in the long term, in the short term. Just the fact of knowing that you are beginning to see some form of risk on sentiment with gold going crazy, bond yields going crazy. I mean, the bond yield is back to a what, 4.44, right? It is not so scary to worry about that, but it is something to keep in mind because you don't see these things regularly happen. All asset classes going up at the same time, right? So that's that, guys. And the volatility index has been trading below 18, so that's a good sign. The more we trade below 20 on the volatility index, the longer the bull market remains, right? Could we have out, like we were at 20 yesterday itself, and then we came back to 18. So that is something to, again, it's part of the game, right? Don't lose sleep over that. Anyways, I don't think we had a lot more in terms of market news to worry about. Netflix, Spotify, all of them have hit a new high. Elon gets announced a $650 million fundraising deal for Neuralink, so that's cool. Yeah, so Trump is currently pushing countries to submit their best offer by Wednesday to avoid the tariffs being reinstated. I actually feel India, Vietnam, Japan might be deals that will close this month itself. He needs some of the wins in order to not have the Supreme Court coming behind him saying, do this, do that. So I was actually going through this data, and it might be fascinating. So since the year to date returns, global equities, except for the S&P 500 and American equities, they have actually done better than the S&P 500, the Nasdaq. So January, February, March, April, all 4 months of the first 4 months of the year, equity indices and indexes ex-US have performed way better than the S&P 500 and everything else. They're up about 10%, 15%, some places even 20, 25%. The S&P 500 and all of these are just Y2D flat, like 0.5% to a percent higher is around there. But the month of May, the S&P 500 rose more than equity markets globally. The Nasdaq was up about 9% and rose more than other countries' indices did. So my bet is if things work out the way I expect them to work out when it comes to tariff, you will see a large catch-up trade in equity indices going back to. So I don't see global markets coming lower. I'll see them staying near the 20% level or 15% level, and I'll see the S&P 500, if all the tariff nonsense works out well and stuff works out well as well, you'll see the S&P 500 head back to catching up with the global equity market indices. So you might not see it up 20%, but you might see it up 10%, 12%, right? And money start moving out from these global equities back into America, so which makes them from 20 come down to 15 and this guy to go up to 10 or 15, whatever, in that range, right? The dollar can then hold steady and head higher bit by bit, not too crazy, right? And that's something that I'm currently looking at happening, is the money that has moved to non-US equity into global equity might start trickling back in if things start looking a lot better. Gold will start doing well, bond yields will start coming lower. That's, if I had to write the most bullish story that I could for equity markets, this is the story that I would write. And this is how it would happen is if I had to write this story. Right, Trump administration wants countries' best offer by Wednesday in tariff talks. They either need a draft or a request. Okay, that's nice to know. Trying to see if we have anything else that happened. Yeah, so Mark Zuckerberg and Meta are aiming to fully automate ad creation using AI. I think by next year end, they're expecting to make this thing. So you basically just come up with a particular budget, you come up with what your thesis is, it'll automatically do all of the other stuff for you. So yeah, maybe AI is taking away. I saw Disney laying off a few hundred employees as well. So Disney is doing that, and I'm certain, right? Most of the jobs that are leaving are marketing jobs. I'm certain that what they're looking at is trying to get into the AI side of it and using that so that they could then throw people out of their jobs. If not throw, lay off, right? Whatever. At the end of it, they're people without jobs. So we have some news coming out today. Uh, yeah, so we got this job openings data, which I'm currently going to be looking at. Looking at 7.11 million new job openings. If we start seeing job openings reduce and jobless claims increase, again, another sign to worry about. I don't want to be the one that calls doomsday, but when markets go higher, look for signs as to why they cannot continue going higher. That's an important way to look at things. Don't look at things as to, oh, it's bullish and it'll keep going bullish. Look for reasons to fight against your thesis, and if they're valid, right? You don't need to find nonsensical things thinking that what if we go back to 145% tariffs and that's why markets don't do well. That's just all bullshit. Don't worry about all of that. Worry about these kind of data points that will make the Fed not do what it wants to do or do it in a way which can be detrimental to the equity markets. All right, let me go see what's happening with our votes. Yeah, so patience and discipline still winning 12 votes. Not bad, guys. I mean, a lot of us here are pretty bullish on the economy, so that's nice to see. So we have the job openings data that comes, we have the factory orders. Factory orders are supposedly month on month supposed to be negative 3%, so that's going to see a drop. Right. I think we have CPI that comes out in Europe, not like any of us care, but that's okay. FOMC members would speak. When do we have the non-farm payroll coming on Friday? So the unemployment rate and non-farm payroll that comes out on Friday. That's going to be fun. I don't really give too much into the non-farm payroll when it comes out on Friday, but keep a watch on it. It's all part of the noise that's there, but we'll try figuring some signal out of it to try see. Wahab says hi Wahab, how's it going? How was your weekend? Trump and China's Xi will likely talk this week. That is apparently looks like that's what's going to happen with the White House. So yeah, that was weird because Fed's Powell's speech pretty much just he didn't comment on the economy, he didn't comment on rate outlook, he didn't comment on anything, even though he's meeting in another few weeks to just go ahead with the Fed policy. And I'm pretty sure everybody, including me, knows that, including him, knows that he's just going to say, I'm waiting to see. Considering the fact that inflation is hitting his target rate, right? So at some point of time, there will be a lot more people that will flip into Trump's camp of saying, hey, listen, why are you not cutting when everything's looking the way you wanted it to? Because you said you wanted to cut based on a 2% inflation. And he's going to come out and say, but there's tariff uncertainty, so I'm not really sure if I can cut, right? So it's a chicken and egg story at the moment that's going on with the Fed and Trump. Disney's going to lay off. So some stuff that's going on there. One of those stocks that I got crazy. I mean, I was just looking at it, Core Weave, right? All the way from $30 to like 120 in a few months. That's just gone crazy. I mean, it's just been unimaginable to see that rally. I mean, few months and 4x, not bad, yeah. That's pretty cool. I mean, for everyone that owns it and has made money, congratulations. So I don't see the Russia-Ukraine conflict ending. I don't see the Israel-Gaza conflict ending. I don't see bond yields necessarily having too much of an effect on the stock market. So I think all of this is going to be there even 3 to 6 months from now, and even then stock markets are going to be higher, right? I wish if all of these things stop, but no one's listening to me. So it is what it is. All right, let's go see what else is going on. Nothing that I could genuinely think about. So Xi and Donald Trump supposed to talk this week. Yeah, so the Atlanta Fed, the number picked up, right? And that's been something. Let me get over this question before I go into the Atlanta Fed. Wahab asked, what are your thoughts on United Healthcare stock? Uh, it depends on the time horizon. If I'm a short-term trader, I stay away. If I'm a long-term investor, I do believe prices can get back to where they were. Not at the rate and speed at which they were, because remember, you have someone at the White House, not President Trump, but RFK Jr. and everybody else. I don't see them as being very pro pharmaceutical, pro healthcare as a strategy for the White House. So I usually stay away from, even though I like United Healthcare as a company, it's one of the maybe one of the best well-run companies out there when it comes to American healthcare. I'm saying in terms of a stock, not in terms of anything else. Could this be momentary and it goes back to its previous high? Possibly. But would I be wanting to risk my money on this? Maybe not. I might find better companies, right? Like we were talking about a company called the Trade Desk the other day, a firm. All of these guys, if I had to really gun to my head, make a choice, I would rather choose a company that's in a growing total addressable market, growing equity returns, growing revenue, double digit revenue especially, and then see how that plays out. Because it's just simpler for me to not find who's in the eye of the storm and try seeing whether they can get out of the eye of the storm and figure out companies that are away from the eye of the storm and still growing at a similar or better rate. Maybe necessarily I won't get the same discounted price, right? I mean, Wahab, at the end of it, you're looking at it also because you had like a $300, $400, $500 stock down 50, 60%. And they have their own issues on hand, right? Do I believe that they'll solve it? Yeah. Do I believe they'll continue to grow? Absolutely. But do I believe there are other stocks out there that can give me better risk adjusted returns, right? That is more important to me. It's not the return that I look for, it's the risk adjusted return that I look for. What gives me better sleep at night knowing I can get the same returns? That's how I look at investments, right? Thanks for the question though. Yeah, so the Atlanta Fed's Q2 GDP now forecast is just raised to plus 4.6% up from 3.8, right? So Q1 we were down 2%, then we came down to 1%. We were like, oh my God, we're getting into a recession. Now we're growing at 4.6%. So where's that recession? Right? We might say this 4.6 even going down to 2, right? But 2% growing on an economy, yeah, the recession out of the window. So yeah. Have you guys been getting a lot of spams on Twitter recently? Everything I post, everything I tweet, someone or the other just comes up and starts saying this gentleman's analysis is really good. He's awesome. All of this. It's not me. I know it's a spam, right? But why goddamn so many spams, man, on Twitter or X or whatever it is now? That I'm like, it's just ridiculous the amount of scams that currently go on, or spams, whatever the hell it is. But it's just stupid. Any tweet that I open up is suddenly just filled with, look at this guy's analysis, look at this guy's analysis, this, that, this, that's all a pretty goddamn scam. Let's see. Yeah, so gold went up about 2.8% on safe haven demand. I mean, I get the safe haven demand, but I mean, are you telling me that at all-time highs you're still saying safe haven, and still buying it? Okay. Yeah, so the ISM manufacturing imports in the US, they dropped to about less than 40, 39.9. That's the lowest since 2009. I don't know, man. Some of these things I'm not really sure how they do turn around and affect the economy. How do they? What is the lasting impact of these tariffs on the economy, right? On the economy, the stock market I know will be fine. The economy is what I'm worried about. Eventually, the stock market will reply to what the economy does at some stage, right? But in all seriousness, at the end of all of this, we still have the Fed who can cut by 300, 400 basis points if things go crazy. I don't want them to do that because that means that shit hits the fan on planet Earth. So it's better if they don't cut. A lot of people want them to cut. A lot of people are expecting them to cut, but it is better for them not to cut. Trust me, when the Fed doesn't cut, when the Fed leaves the world to do what it does, we have better equity markets. So don't waste too much of your time trying to figure out whether the next thing's going to be a cut or when is he going to cut. People are saying 2 cuts this year. Some are saying 4 cuts this year. Some are saying no cuts. No cuts is a better scenario. Let them keep the firepower in order, because 0.25% lower on the mortgage rates doesn't make anybody buy a house. No one's been like, oh my god, I'm waiting on that $1 million purchase just because the interest rate is 5 and not 4.75. So not really going to be happening. That's not something to truly spend too much time thinking about, right? Especially one of the things, right? US crude rising by 5% in its biggest intraday gain since April. And that's coming at the backdrop of OPEC increasing production, right? So that's something to just go in. Anyway, everyone that's new in here, go ahead and subscribe. We do this pretty much every day at 7:30. We got some of the OG gangsters with us out here, Kevin, Jason, all of them. I'm not sure if Jason tuned in, right? I'm not sure. Yeah, but we got all of them. We got Wahab, we got Naveen, we got Anix, we got Matthew, we got Dikshant, we got Henry. Everyone's here, so that's cool. Nice to see you guys. Go ahead, subscribe, put in whatever the votes, comments, everything. We go over pretty much all of it. I don't think we miss out on anything, so that's fun. I mean, as more people get in, I'll be able to take in more questions, so that'll always be there, right? So I don't really think anything great's happened other than this, guys. So I don't want to take up more time. You guys should go enjoy your time, enjoy your Monday evening, have fun with your families. Let's tune in exactly 24 hours from now, 7:30 again tomorrow. Look forward to seeing all of you guys. Let me go in and say thanks and enjoy. Right? So thanks for all of you guys that tune in pretty much every day. I hope I'm able to bring in some form of, some signal from all of this, and it helps you guys. It goes a long way to see all of you coming back in every day. Makes me want to do this more. I'm also thinking of trying to start doing this maybe towards pre-market or like just before market open. That should be fun as well. So we can do that. Let's see, maybe for a week we can try pushing that in. Let's see. Let's get a few of us into trading. Maybe I'll show you some of my positions and the way I make some positions as well. That'll be fun. That's something. If you guys have anything to talk about, go ahead, just put it in the comments. I'm here for a few more minutes and we can talk about it. If there's something pretty cool, we go ahead. I don't want to keep you guys here for too long. I was actually thinking of speaking a lot more about the Fed, but he seemed to be a nothing burger. That's the last thing I expected, but yeah. I'm going to look out for the Chime IPO that's coming up. I want to see what the demand for that is, because usually when you start seeing a lot of these IPOs, I like seeing how much the demand is, what's going to happen about it, and draw parallels to what the equity markets will do from there. So in all other good news, right? Jamie Dimon's not leaving. He said he's here for a few more years. So we got a crazy guy out there who's just unbelievable. Maybe the best banker I know of the world has ever seen. I think after JP Morgan himself, Jamie Dimon would be the next guy that I would ever be closer to in terms of being the best in the world, right? So anyways, guys, let's call it quits. Let's connect. Let's see if we have maybe tomorrow or day after, or maybe today. Let's try seeing if we do a live during market hours. So tune into that. That'll be fun as well. Thanks for everyone that joins in. You guys are the best. And for all of you that are new here, go ahead, subscribe and watch our other videos. Enjoy, guys. Have a good one. Take care. See ya.